Hey everyone, thank you so much for joining Archangel Alts. Coming to you here with just some food for thought and our instant insights. This is not a basic training thing. This is not going to be directly on following the markets and the other things that we're always talking about. So this is a really important topic, and it's one of the things that frames my understanding of the challenge that we face when we're trying to accomplish this pretty amazing goal. And basically following an exponential growth by compounding our trades and doing so in this crazy market. So upon the backdrop of a Bitcoin that is striving to be healthy, what we reported in our last crypto market watch instant insights was keeping an eye on the volume, and of course here we are. So my concern was that although it has been healthy to see this kind of steady up and the volume that backs that up. In fact, I can show you. So we've got a few Bitcoin, a little bit more than a few Bitcoin, and over here we have 10, 11, 8, 18, 7, 12, 20 Bitcoin. It's been able to continue up through what seems like a fairly natural buying process. The oscillation is not so steady that it's just controlled by bots. But, my concern was that this range also was showing the volume going down. Volume is, speaking to, in my opinion, this is, there's different ways to look at the same data, but what I would consider it is whether it's good volatility or bad. Good volatility meaning that a lot of people want to take advantage of good positions and are excited about earning Bitcoin, and people that are satisfied with their positions and they're selling it and they feel like they got a good value when they sell some, and are maybe looking to speculate to wait for it to go down a healthy amount to buy a healthy amount back in. Bad volatility meaning either people warring against each other to try to force bad things to happen in the market to gain an advantage, or that there's just a lot of fear, uncertainty, and doubt, and people selling off for the wrong reason, and then people exploiting that by buying back in. So overall, when I see that a lot has happened, and I think that this is a little bit of a natural movement, but this might take a little bit more than that. No, it's about the same. But we are down another 40 million in volume. So the inevitable that happens is that it's going to start to drop. Now, this is not just like, oh, it dropped. Somebody realizing the same things that I would, wait until they consider the right time to start selling a little bit downward, and then other people fearfully join in that process. And that's kind of this increase in volume that happened second time is a break in kind of a normal oscillation that is just human behavior and bots, trading on that behavior in the midst of it. I don't think as much of the market is as sophisticated to the stock market's bot, auto buying and the e-minis and all the different things that are going on there. But when we watch it here, since this is, based on the, ones and zeros from its inception in 2008, before there were any exchanges, to speak of to even do anything with this, it was just either mining or being in cryptography groups, and then geeks learning from there, geek in a good way. So, this level of sophistication speaks to, the human interaction, to shark, to whale, to institution. We're still just in that very early, birth phase of all this stuff. It's a pretty amazing time to live in, folks. So, looking at all of this, this is a little bit of a, my concern was that we would see something like this, and a lot of things that are being propped up. The volume is extremely low in the market, and when that happens, things slow down. See, Ethereum's down under 6,000. BitTorrent, kind of a desperation to get out of 500, 600 Bitcoin positions per rate. BNB has, this is healthier than it used to be. It just means that it's being used, and that's good, but they also put good press out there on it. XRP being next in line, and then EOS, and then Litecoin. That's very interesting. But slow and steady wins the course, and that's going to be Litecoin's thing. So there we go. There we go. Isn't that hilarious? I just always seem to have the timing is like I don't even get to get the words out before the things that happen. So day after day I've been saying, since it did such an increase above 36 to 37 to 3800, if it could maintain 3950, that would be a healthy Bitcoin. So, sure enough, this is my concern for the lapse in volume, and this is people taking advantage of it. So it makes perfectly good sense. This looks like a reoccurring bottom over here. So, I guess if we would say that that's a retracement of such a short period of time, I don't know at what point the traditional economist would point those things out. But you can see the spike is, considerably, more than what we see every hour on the hour. So there's going to be, at least a stabilization. Now, these things can change in a heartbeat. I certainly don't have, crystal ball to know what happens next. But anyway, so let me get to the topic of this video, just kind of on the backdrop of Bitcoin as it's doing what it's doing. So what are the odds? And you might be thinking in terms of gambling stuff when you hear like, what are the odds of this, and statistical probability, and what is the math behind it? What are the chances of things doing what you want them to do? So, the average Joe on the street, if asked, what do you think your chances if you were to try to buy or sell a coin or buy or sell a stock or whatever, your chance that if you guess, I'm going to buy it here and I'm going to sell it for profit here, what are your chances that you will succeed? And they'd probably say you have a 50-50 chance. You don't know what is going to happen, so therefore you could be right or wrong. And that's the most fair way to slice it, of course. But what I'd like to show you is that, just like everything that we're doing, we're going to teach you in a very advanced version of how, layering the different variables that are involved can dramatically change the outcome and the trajectory that you're on. Almost like a, landing people on the moon kind of level of trajectory. So, and I love the fact that this is happening while, it's already done this level of volatility and it's already responding with, I believe that it is just now improved by $1.50 from where it started. So I love seeing this happen. This will be great if it perks up the market instead of sucking the life out of it, which often happens as a result. So if we start by looking at this from a 50-50 chance that you've chosen the right position, there's a lot more to it than that. So the first thing is that you'd have to be right about where you selected it. So let's say that you're looking at this and you say, I think that Bitcoin's not going to go any lower than here. So let's just assume that taking all the different factors and variables, the time of day, the things that you don't know about, things in the news, add it all together, and let's just pretend that it falls exactly on the line of 50-50. But then, are you right based on that given moment in time? Are you right based on that given moment in the cycles that are happening? Are you right in the given likelihood of the changes in volume in one direction or another? People waiting for the right moment to buy or sell, et cetera, et cetera, et cetera. So you have to be 50-50 on your entry point. You have to be 50-50 on the time in which you have chosen that entry point. So all the variables that you put together, the timeline is very important. Then you want to factor in, have you properly assessed the amount that you're going to have to earn in order for it to be a profit to you. So let's assume that you've already calculated and you know that 0.2% is your buy and sell, your entry and exit. And you said, okay, so anything 0.3 or higher, 0.3%, a third of a percent basically, is going to be my profit. So 50-50 chance that you've chosen the right position, 50-50 chance you've chosen the right time for that position, 50-50 chance that what happens next will be higher than that position. So you have a 50-50 chance of being right about your exit. Meaning that what happens next, the range between your buy and your sell, has to be layered on top of each other variables. Each of these has a diminishing likelihood that you're right 50-50, at the right time, at the right position. That's 2 different levels. And then the same thing, 50-50 chance that it'll go higher, and a 50-50 chance that you'll choose the right time to exit out of that. So just at the bare minimum, you have 4 different times that you could be right or wrong. So it's really, at the very most basic, most simple assumptions about buying and selling, it's really 4 times more difficult than the average person would be considering that. But it's even, it becomes even more critical when you look at the fact that every single position is a self-fulfilling prophecy, and maybe not so much as with larger coins that are worth more, Litecoin, Ethereum, XRP, a little bit. No, not really. Litecoin and Ethereum, basically the other 2. If they are moving with an incredible amount of transactions, they always center around, everything revolves around the going rate, what's kind of under the hood with a growing rate, meaning that if you were to do a market order right away, you might find that it's slightly lower or higher than you actually thought it was, almost always higher. But so everything revolves outwardly between these 2 positions, what it's currently resolving, the difference between these 2. So as your liquidity increases, meaning that there's more and more people trying to get in 1 penny at a time, 2 pennies at a time, 3 pennies at a time to get exactly the best rate at that moment in time, there's almost no variation between who's willing to buy and who's willing to sell at that price. So the liquidity just increases. It just gets better and better as long as it's a desired outcome. Somebody really wants Bitcoin, somebody really wants to earn off the Bitcoin they already have. You'll see an increasing gap with that the more that the prices are different from each other. And so it'll never finish its work with the order book. By the time it's resolved something, there's always going to be something new that came in that's going to happen. So, what we like to see, the response, this is now becoming even more significant. This is really pretty fun. But it's probably going to come down into the bottom third of this and level out. That's our, principle of thirds that we'll talk about. It involves so many different things. So just to wrap this one little piece of thought as something that I've worked out my own numbers on, pretty extensively, because I think it's a fascinating concept, and I think that the likelihood of being accurate just one time is much more than a magnitude of 4. It involves so many different variables. The amount that you've chosen, the effect on the market, the liquidity, the volume, the current rate, what other people know that you don't know, what you have or haven't looked at in the charts, the fundamentals, what's happening in the world at the very moment that you're going to choose to do that. I cannot tell you how many times that I have gone in, studied something very carefully, and I'm, maybe I'm, kind of just getting started for that cycle, so I'm a little bit nervous. I'm getting my feet wet, and I go in right as something has happened that is actual real news. Something got listed or delisted, or somebody did a hack in some, very small exchange somewhere, and the communities know it while I'm busy, with my eyes glued here, and I'm not wanting to be distracted by getting every single notice that comes in. So, the timing is absolutely critical. So, I'm not throwing the odds out there to scare anybody away from this. In fact, we want everybody to, become a part of this front line of the revolution. That I think is the most important aspect of it, is that showing that you see value in the coins that you can trade against Bitcoin by being involved in, looking for lucrative positions to take advantage of. And that provides liquidity, that offers more better options to other people to come along just before and after you. And that is, the reason that Wall Street does what it does. But, frankly, I think that we have a little bit more of a pure form of this, and the fact that it's electronic and as digital age as it is, doesn't throw off the human aspect at all. But the odds are absolutely challenging. It's not to be, you hear, buy low, sell high. And it is, extremely, extremely challenging to know what a real low and a real high are when you have decided what your profit margin is. So, the time factor, the actually understanding where your position is in the overall scheme of things, and the further that you zoom out, the more complex it is to understand what happened in real time. I've been enjoying watching a couple of financial documentaries recently and understanding that people that were watching the Lehman Brothers and the early 2008 stuff happened, that, some believe it was the inspiration for the Satoshi Nakamoto posting in the cryptography group. But in those times, there were a lot of people that understood some of the things that I see. And then there was the flash crash of the stock market where they put it under deep analysis. And it's exactly the thing that I believe makes, what we're able to do with Archangel Alts unique, is that it's not like you can just look back on the charts and say, oh, well, this was here and this was there, and therefore you should do this and that. Anybody can give their own twist on the analysis. What we're going to be doing in our what we are going to do with the subscriber base, with our $99 a month paid membership, along with live trading, what I will be talking you through is understanding the movement, the pace of the market. It has a heartbeat. Each of these coins, not the same all the different times. They, like something that has a heartbeat, they get excited. Other times they slow down, they're bored. Sometimes they even seem like they're going to hibernate. But understanding not just, this is at this level, buy or sell, but watching the changes happen when they accelerate, when they deaccelerate, when you can almost see the thinking or the computation, if it's bots, behind the moves that are happening. And you sort of just anticipate what's coming next based on the speed, the rate, the tempo, the pulse of what's going on. So you add that to just having a fairly cautious plan of execution, and we're very excited to have you join us through the process. I just wanted to give you some food for thought in our instant insights. So what are the odds? The truth of the matter is that they are extremely highly stacked. There's a lot of different variables that affect just how difficult it is to actually buy low and exit with a high that is a profit. People do it all the time. The bots are doing it all the time. People do it at 1 or 2 or 3%, sometimes 5 to 7. The 11 to 20% things don't really happen much. And if you see that kind of a swing over here, it's very rare that it maintains for long enough for you to assess, how do I get in here? Well, I mean, the answer is you don't. You wait for something normal to happen so that you're not stuck at the top. Unfortunately, this is the thing that drags a lot of people in, thinking, oh, wow, if I just gotten in, like, even at, 300 and sold at, 390, then, blah, blah, blah. But just try chasing that upwards. When this is happening, you have absolutely no idea what comes next. Now, I mean, I could actually tell you that this right here, you can't even see it in the same frame, but this drop from, I would say around here, 292, when it got around 282 or so, was a pretty strong sign that we would see something like this. I wouldn't expect that extreme, but then I expect it when, it turns out looking very much like it would be kind of a pump type situation. So then I wonder, did it happen at the hour on the hour? And the answer is absolutely yes. In fact, whichever group this was that did it kind of had one over on their members because they started the process early. So the early adopters got to get in on the best movement there. And then this was somebody very smart who knows how to do like a second stream there. This was good profit here. This was good profit here and here. I watched it very cautiously, and I actually did not get in on this because, frankly, when it's down, I mean, look at what the volume is before all this happened. It's not even registering there. And, I don't like taking a risk with something that I know is that low in volume, but low in value. See, the volume is 0.00000. There's some 0.0000000. There's some. When the actual volume that exists is like blips on the screen, it's just, this was chosen for its ability to pump. So at some point in time, it's not going to stay up here. It's actually up there much longer than I would expect it to be. Unless, you know what? I mean, there's a chance something fantastic happened that they announced at the hour on the hour, and is just now, becoming the greatest coin ever. But, these are the kind of things that lure people in to think that, the opportunities abound one after another. And these are all, on the hour and a half hour. Very convenient. So the natural movement is what you're looking for. Smaller moves that make logical sense based on the actual current value of the coin, entry and execution, and exit points. Looking for points of resistance and support, but also understanding the pace and there's a kind of a life force that runs through the different movement of the coins. And so being able to sense that pace is what we have been able to trade on very successfully. So I hope this is interesting food for thought for you. And we're going to be actually doing a little bit of trading, not on the live stream right now, because I don't want to lead people astray in a market that I personally would not recommend the beginner trading person to try to figure out which of these are real positions and which ones are spammy. So as soon as I see more stable opportunities, I'll try to jump in with the next live stream ASAP. I also want to start a series of just looking at individual coin projects one after another, and like, what are they about? What do people think about them? Just doing a little bit of research with you at the same time, just to kind of show you coin by coin. Some of that is going to be in our advanced section that's for paid members only, but some of that I think is interesting for everybody to be able to learn from. And so we're just kind of putting a lot of that stuff out there while we're still in the midst of our soft launch. So we thank you so much. Please subscribe, ring the bell so that you get updates. And if you like it, give us a thumbs up. Please let others that you know that are into crypto, let them know about us. We are doing just organic getting the word out. And please join us on Archangel Alts. We're going to be doing very advanced trading techniques that are unique to anything you're going to find anywhere else, along with things that you will find elsewhere, but our own twist on those things, because the fundamentals are important. So please come join us. Let other people know. Subscribe, join, do these things. Yes. All right. God bless you guys for the time being. Archangel Alts out.